In this video, I will answer what the best reward to risk ratio is and how you choose the right reward to risk ratio for your trading. So hello, welcome back, and I just made a video obviously on reward to risk ratio and how it goes hand in hand with win rate, and there were a few questions that came up afterwards. So this is a follow-up video. And I want to help you choose the right reward to risk ratio for your trading. So let me move this so my face is not in front of everything. When you get into or when you choose and when you design your trading system better, you have two options, two broad categories of trading systems when it comes to designing your reward to risk ratio. One is you choose a reward to risk ratio, or a system with a high reward to risk ratio. The second one is a low reward to risk ratio. All right. So what does it mean? How do you get a high reward to risk ratio system? A large and wide take profit and or a small stop loss. All right. And how do you get a system with a lower reward to risk ratio? You use a larger stop loss and or a tight take profit, a smaller take profit. All right, that's the basic premise here that we're working with. So what does it mean? Let me just draw it on the charts. Let's say again, for whatever reason you get into a trade, your stop loss is here, and we are in the first option here, high reward to risk ratio. So we have if it's large or wide, this is a decent reward stop loss size. And then we have a target where we're targeting roughly the lower lows here. So this is a 3-to-1 reward to risk ratio. This is, let's say, a system with a wider take profit. And let's say the same or another trader trading the same system, just the parameters of how you place your stop and target are changed a bit. And this trader uses a larger take profit stop loss and also a smaller reward to risk ratio. Let's, for this example, just go to that I can deal with the math in my head. Recording, calculating and talking is not that easy. So let's say this is 3-to-1, this is 1.5-to-1 reward to risk ratio. All right, so option 1, option 2. What does it mean? So first of all, here, once the trade moves in your favor, obviously you will stay in the trade much longer compared to here. So here you probably have, in the first option, you probably have to sit through ups and downs, back and forth. The price will move in your favor, it will move against you, and you need to stay in the trade for longer, so the holding time will be higher. So that is very, very important to understand, whereas the holding time on the second option is much shorter, obviously. Longer holding time. Okay. And in this example, we don't see it as much, but there are traders who use a much wider stop loss on the second one and a much tighter on high reward to risk ratio system. So if we go, for the example, let's make it even more clear. Let's say we go to a 5-to-1 reward to risk ratio and you have a very, very tight stop loss. What does this tight stop loss mean? It means that when volatility picks up just a little bit, you will be taken out much easier out of your trades because the price has an easier time reaching your stop loss, obviously. So more stop hits during volatile times. Already you get an idea for how reward to risk ratio and the win rate go hand in hand. You cannot just observe one or the other in a vacuum. They don't exist independently. They only exist when you look at them together because, well, a high reward to risk ratio, you will have a longer holding time, and you have, obviously, when the longer you're in a trade, the more chances you have that the price is going against you, and more stop hits during volatile times. Both factors mean that the win rate will go down because the price has easier chances to reach your stop loss when you're not exiting as soon as the other trader, and yeah, you're staying in a trade much longer and you have a tighter stop loss. So, and this is really where it gets interesting, lower win rate. On the other hand here, the trade on a second system with a low reward to risk ratio, you have a wide stop loss, so the trade can develop and it can take time, it can move back and forth. Even when volatility picks up, it's not as dangerous and as threatening for your trade. And also at the same time, it has a much easier time to get to your take profit. The holding time will be much smaller here as well. And both factors, you have guessed it, means that the win rate will be higher, obviously. So again, what is better? A high reward to risk ratio and a low win rate, or a low win rate and a low reward to risk ratio and a higher win rate? And there's no right or wrong. It all comes down to what you prefer as a trader. Maybe there's a little bit of a distinction to make when you are new to trading. I would say that low reward to risk ratio systems, the second option here, are a little bit easier to trade when it comes to trading emotions and psychology, because you have more frequent winners. You don't have as many negative experience because the win rate is a little bit higher. Yeah, maybe your winners don't compensate for your losses that quickly, but for new and beginning traders, it's usually better that they have constant positive feedback. Whereas this one can be emotionally challenging. Yes, it's nice on the one hand that you just need one good trade and it will pay for a few losing trades. But when you have a very low win rate, that can be emotionally challenging. When you have 3, 4, 5 losing trades in a row, and then you still need to trade at your best possible level, you still need to perform well, you have to trade without emotions, you have to respect your rules and not start doubting your system. So you might have the exact same system as another trader. The entry rules here usually don't matter. It is about everything that how you build your system around it. And that is how you can also understand maybe that one trader can trade one system very profitably, another one just cannot make it. And it's not necessarily about how he enters, when he enters, what indicators he uses, but it's how he manages his trade parameters around the entry, how he designs his reward to risk ratio and his win rate, and how he makes it fit to his own personality. That's when you always hear the quote that you need to make the system your own, you need to personalize it. And this is really what it means, that choose the stop loss and the reward and the target size in a way that you can deal with them, that they are compatible with your emotions, your way of thinking, your risk appetite, and how good you are with dealing with losers, with winners, with holding trades, with holding times, and holding on to trades.